Good morning, everyone. It's Chrissy from Solstice ATR. You can find me on Twitter, Instagram, Discord. We use adaptive algorithm for trading side market, up market, down market. It doesn't matter whether it's an equity, an option, an ETF, a future, a forex, a crypto, Ethereum, and many, many more. The most important thing, we're not a broker dealer. Past performance does not indicate future results. Use at your own risk. Data may not be copied unless requested from us by checking the website policy, or you can get in contact with us right on the top right corner with the phone number, or you can DM me on Discord or Twitter. Let's first start by taking a look at July 10th through the 15th, what the outlook is for the coming week in the Fortune 500, the NASDAQ, gold, the VIX, and a couple other instruments. Let's first take a look at what happened in this week. There's a lot of people in the equity market betting that the overall market and the calls to puts ratio, because of the spikes up that we had, and eventually the VIX has been, you can see it's in a symmetrical triangle from the prior year, 2021, the annual high to the annual low. We spiked above it a little bit and we fell back in a linear regression downtrend, and we have a linear regression uptrend compressing to make a decision on the weekly chart if there's going to be continuation to the downside. And we had lost the $25, $26.50. That was a very important area in the VIX at 50% ratio. Does this mean that it can reverse and go back to the mean to the upside? Yes, we have to pay attention to what the federal policy is, to what inflation is doing to us, the earning reports, as well as the economy outlook for the end of 2022 for the coming 2023 setting up. So remember, the VIX lost the 2550 area and the 2650. This is an important area for me in order to see that there's going to be more volatility and there's going to be a lot of turmoil in the economy. This thing has to reverse back to the top, or it continues back to the bottom side to the 21 and the 200 SMA. That would be the bottom. And if it reverses through here, you look at the other side on the VIX. But remember, the call to put ratio on Wednesday spiked up quite a bit. A lot of people are betting against the overall market. Let's go to the next slide. This is once we take a look at the SPX, the outlook from 1946. This is historical numbers. This does not have to happen in 2022. We can have either side of the market downtrend, or we can have an uptrend. We are still in a linear regression on the weekly bars in a downtrend. But on Friday's price action and Tuesday gave us a little bit of hope. Things may be turning around in the overall market on the fast time frame. Remember, this is a 5-year weekly. If we look at these numbers, in 2008, there was a lot of turmoil here in relationship to the short term. The NASDAQ had lost 33%, the Russell, the S&P lost 25%. We can see in relationship in the prior videos I put where Netflix was, where AARK management came back to the March 2020 lows, and is still hovering around the $40 range. Does this mean it can clear 45 to continue higher? And Amazon came back to the April range, and the NASDAQ 100 on this, because we're using the S&P 500, it came back to the consolidation of the August, September, October before the rally in 2021, before the 2021 peak. Then we had the 21 high and low, and we fell back in the range of the January 4th of 2021 lows, and we're trying to find a level. We did not test the 200 SMA, and we are underneath the 116 simple moving average. This is a very important area to pay attention to if we're going to have continuation to the upside and clear the 116 and the 18 simple moving average, which is the midpoint for the Bollinger Band. Let's go to the next slide, and you can take a snapshot of this. This is for illustration use. I put the historical numbers. If you look at median rate of return in 9 months to a year, it's about 26%. Let's take a look. This is putting the combination of the S&P, NASDAQ, and the Dow all together, the numbers. And I've been using the slide over and over these years. The distance we travel from high to low is almost similar to the mama bear, just slightly about below the 20%, hit about 14%. If you take the high and low, we came back about 14% from the highs, from high to low. If I duplicate it, that's how much. So we have to pay attention to the data at hand. If we're going to accumulate more value here, because you can see the accumulation here, the combination of the four, you can see it here. That was the midpoint before the August, September, October rally to the December, and this was the January lows of January 4th of 2021, the highs. Then we fell back in, and we made a new high in January 3rd of 2022. Then we eventually fell apart. We couldn't break out of this 55 200 area. We did it once, twice, three times. We fell down. We tried to push up. We fell back in the range of the test of the area of the upper breakout, and we reversed back up. We still haven't tested the 200. We have not tested the 116 SMA. This is a very important area for us to continue, come back to the 38.2, or do we fall back in the main to the midpoint of this range? Pay attention what the Fed policy is, what the outcome in the economy, and where we are today in relationship to the short-term noise that's happening in the market. Let's go to the next slide. And what I want you to do, remember, if you like this video, hit the thumbs up. Secondly, hit the smash button. Thirdly, you can subscribe for free on YouTube channel. So let's go one by one by taking a look at the S&P 500. We went over the January low. You can see where we retested it. We tested the December. You can see that was the November low. We tested it. And the December low of 20 before the rally high, and we tested it, and we're trying to push back up on the S&P 500. What I want to do here is break it down on an annual chart, daily chart, to overlook at the overall market. Instead of using the weekly, we're going to go time frame. We're going to go 1 year. We don't have to go that far back anymore. And we'll go on daily chart for most of the charts that we're going to present in today's price action. And let's just turn around. We can see that the annual high that was made in this year, that was the high, and this is the annual low for the low. If I draw just a fib, where most people do draw a fib, they want to draw to the upside or the downside. I usually set up my fibs on an annual basis for the prior year in relationship to price action that's happening month to month, and I use the measuring move. We can see now we are starting to turn the 18 SMA core itself. We got a cross between the 8 and the 5. We created like a cup. We filled this gap here. We have not filled this gap up here. What we can do on the chart, you can always, whenever you see a gap up or a gap down, mark it like this and extend it to your right a little bit, edit the property, and you can go, let's say, if we want to go from this date to that day, I want to go to 7/11, for example, correct? That's the July, and I push OK. It'll mark it going across here. That means that's a virgin control gap. Is that going to be retested or not? And if you look between here and here, we have a small gap down here. I did not mark, but I want you to pay attention. We created the 3 bottoms. We had a nice rally, and Friday was an inside day, and it pushed up to close positive. End of the week on the S&P 500. Do we catch up to the 50 SMA? Do we find rejection here? Or are we going to keep going to the 38.2 Fib, which is F3, and F5 is the 50% where we fell down from? Pay attention to what the charts saw for you. We are in a linear regression downtrend. If even I draw a channel, you can draw channels now to learn how to do this. We can connect this one to here, or you can connect it to this gap here, which will give you a parallel linear regression channel down. And if I duplicate it and move it up, we're looking for the 50% and the 38% reversal back in the S&P 500. Let's now take a look at BTC. Oops. Bitcoin. I'll do Bitcoin first, and I'll go on to crude and all the other ones. We can see that Bitcoin was downtrending in a linear regression downtrend. I was looking here for the rounded bottom. It pushed up and eventually it failed. It tested 100% of this gap. You can see almost 100% is filled. We still have this gap down here. This is the monthly measured move when I draw it according to price action. I do have this level here marked. I have this level marked here, and eventually this marked where we fell down from because we were trending up in this rounded bottom, and eventually we failed on this gap due to the international market and regulations in crypto. And a lot of companies in crypto went belly up, and a lot of BDs that were in the crypto business failed in the international as well as the Met. There was about 25 to 26 companies that disappeared off the face of the earth by filing bankruptcy. We can see we're getting a rounded bottom. The 5 and the 18 are catching up to cross, and the 18 is holding now. This candle that we broke out of, and this one tested the backside of the channel. You can draw a channel from here. We can, instead of grabbing it this way, it's going to be sharper. So you can grab here to this candle here. We see where the level is we have to come up to in order to get a momentum up. And if this continues and this crosses, this is a bullish cross, I would expect it to continue to the backside of the 50% measured move on the monthly chart for BTC. If it fails and cannot hold this candle, then we look for the backside of this candle to fill. That's Bitcoin. Let's go now to CL crude oil. I'm doing it a little bit differently today. We can see that crude oil on the spike of Ukraine-Russia war spiked up here. We fell back down, tested 2/3 of the move, fell back in, tested that 93, grinded, created a little higher low. It was in an uptrend, eventually retested this area, continued higher. And here we fell sharply after the retest because they're saying they're gonna, you remember, oil is manipulated price because of what's going on in the Eurozone, cost of heating for the winter over there. People are finding ways to get oil at a lower cost, but at the same time, U.S. has been taking oil out of the market, sending it to the Europeans to give them a little help. It spiked the price up, and I know there's a lot of taxes here. If this is going to be a relief after the 4th of July, does this mean that consumers are going to be spending wisely and going out wisely? Possibly. If this is not going to continue higher to the backside of this channel and the 107, 108, we cannot clear it. We cannot get to 106, 107, 108 to continue back up in the price of oil, and we end up losing that 93 area. I would look for the backside of the 93, this consolidation before the Ukraine-Russia war. And if we fall back in the range, I would expect crude to be around the $88, $86. I'm not bearish or bullish. We traded what we see. We noticed in the last 2 weeks that crude reversed back up and cleared the 116 SMA in this candle here from the prior week. It tested the 89 EMA. Does this mean it's going to hold or not? Pay attention to the price action. Don't be biased, and we'll see if it's going to continue to the backside of this channel to reverse back in, or do we fall back in crude oil. Let's take a look at GC. GC had a lot of problem in the last 2 weeks, and I called everybody and I told, hey, be careful in crude oil. I know I have a lot of Fibonacci's here on GC. Let's do the micro GC because it doesn't have the fibs. I don't want to complicate things. We can see we are in a linear regression downtrend. We lost that level after that dump. We rallied. We came back to a prior 2-year level. You can see this area here of this consolidation before the push out of the symmetrical triangle. We looked up in that linear regression uptrend. You can see that spike on Ukraine-Russia. Couldn't hold the 50% of that move. We double bottomed here. U-turned up, couldn't hold it, fell back down. The distance we traveled from here to here is the same distance of the breakout from here to here. Rounded top, it created a rounded top, couldn't sustain to push higher, couldn't hold this channel, fell back in the range. Does this mean we find support here in crude, in gold, or does gold want to continue to the 1660, 1680 before you can find a level where you can purchase gold and find accumulation in that area? That's GC or gold or GLD. Let's take a look at now the VX, and I want to put the VIX up here. I do have the monthly measured move on it. Remember, the annual high on the chart for 2021 through 2022 low, this is the high and low. You can see it. Unfortunately, when we fell back down, rallied up. We created lower highs every time. You can connect this dot here to this one here. You can see it's in a downtrend. And if I connect this one from here to this area, we tested the breakdown of that wedge. Okay, so if I zoom in here, we can see that the measured move high and low, I measured it. But what I did, I wanted to take the extensions to the downside as well as the extensions to the upside. Because if I don't see VIX clearing the $27 range up here to 27.20, 30 cents to continue back up, I think it's going to find a little bit hard time. A lot of the people are betting to the upside that there's going to be a problem in the economy in the next couple of months. You have to pay attention to the Fed policy. We are in a downtrend. On the daily chart, we lost the 50 and the 18 simple moving average in the VIX. So this $27 area, $28 is very important for me on the VIX in order to continue back up and get the market lower. If VIX going to stay in a downtrend, I'm expecting the retest of the 24 and coming back eventually to this consolidation here before the rally back up. So if this is lost and I lose the $24 range, I'm looking for the backside of this area to find support around the 22 in VX or VIX or UVXY. Let's now take a look at the NASDAQ 100, and I'll use the micro NQ so we don't have too much fibs. We can see that the micro NQ, after this year's low that we created here, we can see we are turning back up in a wedge. But if I draw a linear regression uptrend, we can see that this area here is a linear regression uptrend. We're coming back to the 50%. Does this 50 SMA, as well as this annual fib that was created in 20, if I put my mouse on it and right click, it shows you 11, 25, 2021, March 4th of 2021. This was the low prior year. We are retesting it and testing the 50 simple moving average. In order for us to continue higher, we have to break this candle as well as the 50 to get back to the 38.2 and 50% where we lost the distance from here to here, coming back up in the NASDAQ, or you can use QQQ. Let's take a look at now the RTY, which is the small cap to 2000. We can use the IWM in RTY or IWN for the value play. We have came back to the measured move monthly tested on Friday of the June high and low. This is the 50% of it. If I can clear this and I can clear the 50 simple moving average in that 1795 and the 1800, I'm expecting a push back up to clear these three soldiers that took us out. If this is a rounded bottom, this is the cup of it, and we can continue, that would be great. If we cannot and we fall back in, I'm expecting the 18 simple moving average or the backside of this downtrend to hold us and continue higher. So let's go now. I sound more bullish. You can see it in my tone. Let's go micro YM, or I can do the YM without YM. We can see the YM is in a similar situation. This was an annual channel that I had. You can see it coming from 326, 2020 till 519, 2022. And we pushed up. We fell back down. We're getting a rounded bottom. We're still in a downtrend channel. Does this mean we can clear this setup here to this candle here? Or we need to clear this moving, the 50 Fibonacci in relationship to the 38.2 oval F3 to get to the 50 SMA and eventually the F5, which is the 50% fib on the chart from high to low that we have the machine that's set for us. Let's now take a look at AAPL. We can see Apple is setting up on the daily chart, broke out of this wedge nicely to continue higher. This is a very important annual fib 50%. We have to clear the 150 area in order to get momentum back up. In Apple, we are in an uptrend. We created that rounded bottom. This is the head of it. I mean, the shoulder of it. This is the head of it. We finally cleared those gaps. We rounded bottom. Does this mean we're going to continue higher, or do we fall back to the backside of the 140 area, 139 area before continuing higher? Pay attention to what Apple offers. Let's take a look at Google. Google, I didn't do any fibs on it, but you can see it created that W, that M shape, higher lows here. We retested, but this is a higher low from this one, but you can see it's a little bit higher than this one. Does this mean we cleared this area? We cleared the 89 EMA in order to get to the 116 simple. We are above the 50 annual fib in order to get the 116 and the 200 SMA to fill this gap up here on the charts. Let's take a look at Tesla. We can see Tesla. I did the measured move here. You can ask how we do this. This is the annual fib. There's a little tiny area here of these three, I consider, candles that took us lower. We retested the top, fell back in, filled these two gaps, U-turned up, fell back in, getting around the bottom. This is a higher low from this one. Higher high, higher high. If this is going to continue, as long as we don't lose the 18 SMA and the 709 area, 708 area in Tesla, I'm looking for Tesla to continue higher to the backside of the 61.8. That would be the 38.2 fib on the daily chart going back up in Tesla. Let's go back and look at two other things, and I want to teach you how to look at the volume profile and the Fibonacci's. I'll use the micro ES. We can see in the micro ES, the S&P 500 or the SPY, we are in a downtrend. We cannot say we are not. So we can grab this candle here, this one. Oops. Even if I do it this way, you can see where the channel is, correct? And if I grab this candle here to this candle here, we are in a linear regression downtrend. But if this roundness and the 5 and the 18 are going to continue higher, we have to clear the 50 simple moving average and the 38.2. But what is our monthly high and low from June? This is my June high. You can see it. This was the June high. This was the May. So if I draw a fib from here to here, this is just a regular fib, doesn't have the measured move. So if I draw from here to here, you can see where my 61.8 would be, meeting on a regular chart, but I don't measure it that way. I look for the time spent in relationship to my charts. You can ask us how on the website. Once again, if I go to style, I'm going to go monkey bars. We can see that the prior month, we had two distribution. This is a POC that's being visited, no longer valid. We have this POC being visited, but last month measured move tells me, even if I don't look what's going on in this month, we had two distributions, one here and one here. But the POC was lower and the time spent was lower. So if I have a fib from high to low, and my 50% is higher, my expected measured move is lower, which is correct. But I'm looking to see if I can get above the 39.25 to fill this gap in this profile in this area, because if we can clear this, there's going to be continuation to where most of the time spent, as well where the POC developing on the second distribution in the monkey bars, as well as the time spent between value low and value high. You can see a shadow down here. You can see it when I put my mouse on it. That's the value low. That's the value area high to relationship to the POC where most contracts were and the time spent. If I can clear this area in order to continue higher, and I can clear that 25 area, can I fill this gap here to continue to the second distribution on the chart? And let's go to the right side. We can see that we are, this is the open. My time spent is still lower, but look at where my close was on Friday. We retested this area here. But if I can get above that 25 area, I'm expecting to get this gap in this area to fill between the 58 and the 41, 12, 13 area. So the 58. And if we can clear this, we have potential to get back to the upper distribution. If not, and we fall back in, I want to find something that will hold us and tell me, hey, my time spent at 3,800 is finding a low and is creating a rounded bottom. So I'll go to time, style, go back to standard, and I go to standard. Oops. You can see that the chart is trying to round. Where is my low for the week? If I take the 4 days or 5 days, this is my low for the week, and this is my high for the week. If the fibs are going to continue higher, we don't do measured moves on the weekly. I'm going to go, let's keep them that color. It's fine. I'm not going to change them. Oops. Okay, auto. Okay. We can see that the low is here. That should be our support, and the 61.850 and the 38.2. We don't want to lose the 38.2 fib in order for us to continue higher. But if I can clear that zero line or my weekly fib high of last week's high on Friday that was created, and I can get to the 50, which is a control point or a pivot point that we broke down from, I'm expecting the 20% visit, the 38, 50, and 61. So if things are going to go well, if things are going to not go well, I look for the backside of the 61 for opportunity to purchase to continue higher. And usually these points on the weekly chart find support for a buy and a sell zone. So remove the drawing. I hope this was helpful. You enjoyed it, and give us a thumbs up. Take care, and I hope to see you on Discord or DM me on Twitter. Take care.